Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about my new favorite dividend paying stock. So I hope you guys enjoy it, and overall, I hope you guys learned something. And if you have any questions, go ahead and ask them down below. Also, we are doing a course. I'm super excited to announce this. It's going to be starting next month. So we have a full month of preparation. For anybody who sends me their email, you guys will have access to it completely free. How you guys have to do that is go to my Instagram and just DM me your email and say, I want the free course, and you guys will be signed up. It may take me a couple days to get you guys in there, but you guys will be in there, trust me. So now let's jump into it, roll the intro, let's go. So we all know Mastercard as being one of the financial giants in the whole US economy and the whole market. Now I do think that their dividend is going to be one of the best to get into right now. So the reason why I'm actually getting into Mastercard is because their dividend is pretty decent with 0.5%. I understand that may not seem like a lot for you guys, but their dividend history is at 9 years, which is pretty good. But on top of that, their 10-year dividend growth is 31.4%, which is actually pretty decent. And I do think they're actually going to keep increasing it just year after year after year. The total dividend amount is $1.60. I understand that's not a lot of money, but if you have a couple hundred shares, that adds up pretty quick. On top of that, this stock has beaten the S&P 500, the Dow Jones, and the Nasdaq for the past couple of years. The reason why is because it is a giant. It is one of the best stocks to get into. The payout ratio for this stock is around 17.7%, and that's under my 25% rule, so that's pretty good as well. The 10-year total return is around 28.6%, and the 5-year total return is around 37.8% compared to the S&P 500's 5 years, which is at 11.7%. So I do think that this stock is growing. So now let's actually go ahead and look at where I'm going to get into, where are some support resistance, where I kind of see the stock going. Let's go. Alrighty guys, so the ticker for Mastercard is ticker symbol MA. This stock here is trading at $4.02 all the way back in here in 2006. If you guys would have got in on this low, you guys would be looking at around a 3,800 total percent return. Adding all those dividends, you guys would be up over 5,000% if you guys would have reinvested them. Now look at this growth here. I understand that this is, just very similar to the S&P 500, but you always have to look at support and resistance. I don't care what you guys are looking at. That's one of the very first things you guys should look at. So now looking at this, you guys can see that this stock has came in contact with this yellow line here, and every time it's hit it, it's gotten bought back up. So here, and a couple times down in here. So every time that this stock has hit it, bought back up. That's what you call a support line. Now looking at resistance here, you guys can see that the resistance lines are kind of spread out here. Let's go ahead and do a horizontal line though. The resistance here at around 226, that's a pretty strong one. And then the next one here at $347. And that is the all-time high. Now, realistically, do I think it's going to hit that anytime soon? Yes, I really do. I think that this stock is one of the top growing stocks out there and is severely underrated by dividend guys, just because a lot of dividend people love to chase those high dividend yields. And with this one being so low at 0.5, it's kind of washed out by a lot of other ones like Home Depot, who will pay you just a little bit more. But I do think that one, they are growing at a significant rate. Two, they have been increasing their dividend payouts by 37%, which is nuts. So right now with this stock being, literally 13% off its highs. Realistically, do I think it will hit that? Yes, I do think that this stock will hit this high probably within the next year and a half. So I do think that there is some upside potential right now. Downside potential is it coming back down to this 200 moving average line, which honestly, I kind of hope it does. All of the financials and all the books behind it saying that this stock is a very good stock. So with this stock falling down this much, that means the stock is severely undervalued. So I do think with it falling down, what you guys can do is go ahead and average your position if you guys get into it now. Realistically, it's going to actually use this $300 mark as a support line, support line, just because stocks kind of have tendencies to use whole dollars and half dollars and hundreds and 50s to actually use support and resistance. So you guys can see it kind of curled right in here, right around that $300 mark. So I do think that now we're kind of going to be going up on this climb. It did break that trend as of today. So I do think right now we're in the money for it to come back up. Now, if you guys were going to swing trade it, I would get into it around this price point and set your stops at around 280. You're going to be risking, 8% or so to make around 14 to 15. So that's like a 2-to-1, which is pretty decent. Now, overall, I do think that this stock is a perfect long-term investment for anybody who's just getting into the financial game. I do think that this is one of the best stocks to get into and is severely undervalued by dividend investors. So that is it, though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. See you tomorrow.